Hello, this is Group 2's accounting video presentation. I am Rachel Tan, where I will begin by explaining with examples how source documents are translated to business transactions. To start off, we first need to identify the date of transaction, which will be stated on the source document. Afterwards, we need to identify the corresponding accounts and amounts affected by the transaction before we record them down in the general journal. Let's begin with an example of the share certificate, which states that 50,000 ordinary shares of $2.50 each has been fully paid to Benson Trading on 1st March 2020. The value of the ordinary share will be $125,000. Hence, both the cash and the ordinary share capital accounts will increase by $125,000. Since cash is an asset, $125,000 will be debited to the cash account, whereas, since ordinary share capital is an equity account, $125,000 will be credited from it. Moving on, this invoice has shown that $40,000 worth of computers, which is the inventory for the company, are sold to Sally Pitlet on 17 March 2020, where the cost of goods sold is $24,000. With this in mind, both the cash and the sales revenue will increase, which leads to $40,000 being debited to the cash account and $40,000 being credited to the sales revenue account. Furthermore, after selling the computers, the cost of sales will increase, while the inventory will decrease. This means that $24,000 will be debited to the cost of sales account, which is under the equity account as an expense, and $24,000 will be credited to the inventory account, which is under the asset account. Sometimes the date of transaction is not the same as the date that the source document is issued. For instance, Benson Trading had to pay $12,000 to 3 of his staffs as their salary, where this document was sent by the manager on 15 March 2020. And salary was also transferred to the bank accounts on 23 March 2020. Salary expense was incurred and accrued on 15 March 2020, where both the salary expense and the salary payable increase. This means that $12,000 has to be debited into the salary expense account, which is an expense in the equity accounts, and also credit salary payable, which is under the liabilities accounts. Then, we have to start transferring cash to the employer's account on 23 March 2020, where we debit salary payable and credit cash at $12,000. Next, we will be identifying 3 accounting concepts, namely accounting period concept, accounting entity concept, and monetary concept. Firstly, accounting period is a lifespan of a business which is broken into regular intervals. The financial statements are prepared at the end of each accounting period to check whether a company is profiting or not. This is usually such that owners or investors can compare the results of different accounting periods. So, how was the accounting period concept used in our project? This was applied when we identified the end of the accounting period for Benson Trading as at 31st March. As a result, we prepared our statement of profit and loss and the statement of financial position accordingly to this accounting period. Wei Na will now present the accounting entity concept.
Thank you, Rachel. I am Wei Na, and I will be explaining the accounting entity concept that was applied while recording the transactions in the journal entries and how it was applied. Accounting entity concept states that the owner and the business are considered as 2 different persons distinct from each other. the owner's personal transactions should be kept separate from the company's transactions because they are considered as separate economic entities. Transactions that only concern the business, also known as business transactions, are then recorded in the business books. As to how this concept was applied, let us look at the example of this transaction that was made on the 1st of March 2020 and the receipt and certification of Benson Tan, who is most likely the owner of Benson Trading Private Limited, as the name suggests, as a registered holder of ordinary shares of the company.
When recording this transaction in the journal entries, we have only recorded the transaction that concerns the business, which is the debit of the cash account and credit of the ordinary share capital account of $125,000 from the 50,000 ordinary shares of $2.50 each that was fully paid by Benson Tan on the 1st of March 2020. We did not record in the business journal entries the transaction of the cash outflow from Benson Tan, who is the owner of the company, as this transaction does not concern the business and it is the owner's personal transaction. Hence, we have considered the company and the owner as two different persons and have kept the owner's personal transactions separate from the company's transactions, viewing them as separate economic entities, thus applying the accounting entity concept while recording the transaction in the journal entry. Now, I'll be passing the time to Jade to explain on how the monetary concept was applied.
Thank you, Wei Na. So now I'll be talking about the monetary concept. The monetary concept states that a business should only record transactions that can be measured in monetary terms. This means that only items with values that can be counted in dollars and cents are regarded in the business transaction. So now I'll be talking about how the monetary concept was applied in the project. As you can see in this source document, Benson Trading bought 42 computers from Candy Electrical. The inventory's worth is $25,200. Since the inventory can be counted in dollars and cents, it can be recorded in the journal entries. Since inventory was bought, the journal entries on the general journal would be debit 25,200 inventory and credit 25,200 cash.
Now, I will be explaining and demonstrating two usefulness of the ABSS accounting software in doing accounting. The ABSS accounting software is useful as it has made it easier in retrieving the necessary documents needed, such as the general journal, trial balance, statement of profit and loss, statement of financial position, and general ledger for cash account. By using this software for accounting, we were able to skip step 3, which is the posting of journal entries to general ledger, step 4, which is the preparation of trial balance, step 5, which is the preparation of the financial statements, and step 6, which is the closing of temporary accounts of the accounting cycle, as the software has done these steps and prepared them automatically after we have recorded all the transactions in the transactional journal. This has helped us save time and in the preparation of the bank reconciliation statement, as we were able to retrieve the general ledger for cash account from the software, allowing us to know the cash account balance and be able to make the necessary adjustments to the cash account. This video will demonstrate how these documents can be easily retrieved from the software. Another area in which the software was useful in doing accounting would be the prevention of clerical arithmetic errors when calculating the debit and credit of the various accounts, which could result in the total asset amount to not tally with the total liabilities and shareholders' equity amount. When this error is made manually, we would have to trace back our steps and find out which account is the source of error, hence having to calculate from the beginning, which takes up a lot of time. And by using this software, it has prevented us from facing such issues and allowed us to retrieve the necessary documents needed and complete the accounting process faster. Now I'll demonstrate to you how the software actually prevents arithmetic errors from occurring, which would result in the total debit and total credits to not be equal to each other. So every time when we are recording a transaction in the software right here, the Software only allows the transaction to be recorded if both debit and credit entries are recorded. And I will demonstrate to you what will happen if I'm only entering a debit entry. So when I press the record button right here, the software actually gives a reminder that an unbalanced transaction may not be recorded, and thus this is the way that the software ensures that both the total debits and total credits are equal to each other.
So now I'll be sharing some areas for improvement as well as on the suggestions that ABSS can improve on. One area that ABSS can improve on is by adding a search bar on the transaction journal so that it will be easier for users to navigate the journal they are looking for instead of having to scroll down the transaction journal by looking through the dates. For example, if the user wants to look at prepaid related transactions, the keyword prepaid will be typed into the search bar and all the journal entries containing prepaid will be displayed. Another area ABSS can improve on is the accounts list by automatically creating the account number for the users when the users are creating new accounts instead of the users having to manually enter the account number, and this may cause in the account being placed in another category if the wrong number is entered. Alternatively, they can make the opening list adjustable such that the users can track the accounts within its category according to their preferred order. For example, in the first photo, the two accounts receivable, Sally and Falcon, are separated. However, the user may want to put the two accounts receivable together to make the list more organized. So with more flexibility, the user can arrange the accounts according to its preferred positions instead of having to change the account number like the photo on the right. Thank you, and that will be all for our presentation.